welcome to the stage Mattias Wallander, who is the founder of Enlight Reasearchi, which is a company for analyzing stocks. And before founding this company, he was for 20 years a broker and analyst for various Scandinavian and Baltic banks. And Mattias will have slides, so you will see them all around here. And he will focus on giving you a presentation about Baltic stocks, and this will be based on fundamental analysis. So pay attention, Mr. Wallander, here you are.
Thank you. I will try and do the intro in Estonian, since I've been here a while. Mina olen Mattias, olen aktsiatega tegelenud 25 aastat. Eestis olen elanud 15 aastat. Ja nii 2 aastat tagasi asutunud Enlight Reasearchi. I hope you understood. So anyway, I'll do the rest in English, don't worry. I know it wasn't that great. It's amazing to see so many people. I was expecting maybe 20, 30 people, but it's really, I think, positive surprise because I wish that when I'm guessing average age here is maybe 25, and I wish that when I was 25, I had learned, or I had this interest to learn about the markets. I mean, I just say 50 plus. So I've been through the internet crash in the year 2000, the financial crisis in 2007, and also now I think we are probably in the middle of a bear market, so to speak. So this will be my third one, if you don't count the Corona bear market, which lasted 1 month. I think that's not the true bear market. So maybe I could ask, because I was just guessing age here, how many of you were active in the stock market in the year 2000? Okay, a few of us. And I would say that for us, this might be the last or the second last bear market that we can use. Because every bear market is a buying opportunity. Although it doesn't feel like it when you're in it. It feels awful, to be honest. And the second question, follow-up question is, how many were active in the stock market in 2007? Not that, wow, we really are young here. And how many are active in the stock market today, I should ask as well. Okay, wow. So congratulations, you are young, and you will earn money on this bear market for many years to come. And again, I wish I would have been to this kind of event. I wish they would have arranged this kind of event when I was young, because they didn't. It wasn't available. Anyway, so what does Enlight Reasearchi do? I think you can think of us as the ones who liberated research in the Baltics. Anyone can go to our website and download research reports for free. And everybody gets the same report at the same time. And there's no paywall, no select clients only. So I think we're kind of disrupting the equity research market. And what we do is basically we research so you can invest. Me and my team, I should say, we are 3 analysts. We spend some 100 to 150 hours per week just reading financial reports, listening to webinars, talking to the CEOs and CFOs, and updating some 30 financial models. So time that you don't have to spend. But it is more to investing than just that. I think we do the hard work, and you still have to do not the easy work, but you still have to do some work as well to invest successfully. Because I think it's very hard, the usual question is, what should I buy? And then I could just say like 4 names, and you buy it, and then we are in a bear market, you probably lose money for the next year. And then you think, this guy sucked, he said I should buy this. And so if you don't have your own strategy or know why you're buying something, then you will not be successful. And again, I wish someone would have told me I could have made money on the internet crash in 2000 instead of losing 90% of my portfolio. So that's what I'm telling you now. See this as an opportunity and not just like to write down the names, because then you really haven't learned anything long term. So I think that's our biggest value add to you, is that we do the estimates for 30 Baltic companies, which means that you can see the valuation. You can compare companies' valuation to each other, and also you can see the valuation of the Baltic market. In addition, we do hopefully an easy-to-explain investment story, and we calculate the fair value, usually with DCF, discounted cash flow, or just peer valuation. But again, as you know, the DCF, you can get any value you want, so don't take that too seriously when you read research. I think that, I guess, I don't know, I could ask that too. How many of you have been on the Enlight Reasearch website? Oh, that's great, more than I thought then. Because I feel like the traction is quite good. We have now 60,000 views or downloads since we started 2 years ago. And we have, the third most downloaded company is Tallinna Kaubamaja, so it's an Estonian company. But the split is basically 40% Lithuanians and 40% Estonians, and the rest Latvians who go into our website. So there is definitely interest, as you can see in this room, to invest and to learn how to invest. So again, does it pay to learn how to invest yourself? Yes, I believe it does. And just as an example, before this, I looked together with Simo my pension 2 account, which when the Estonian pension reform happened, I basically took all my money out of the Pillar 2 fund and put into my own PIK account. And that was 1st September last year. And since then, my Pillar 2 PIK is up 25%. And I won't mention the bank that I had saving in, but that fund that I took money out of is down 9%. So definitely it pays off, but it's been many years hard work, and I'm still working 60, 70 hours per week to just read reports and follow the markets. So it's not easy, but it is possible. And I had verified that because we actually did it on the computer, because you should know that when you ask guys, how much is your portfolio up, and they say 30%, then the truth is more like 15%, so you can half it. So it's actually been verified. To the topic then, best stocks in the Baltics. First, we need to define what kind of market we are in. And as I said in the beginning, we are in a bear market, but don't be sad because you are young, and this is an amazing buying opportunity. So if you look at the US market has been in a bear market for 6 months and is down 22%. This is like halfway through a bear market. Looking at the Baltic benchmark, it's a bit older bear. It's 10 months old and down 23%. So about the same in percentage-wise. But of course, as you know, the riskier stocks are more down like 50 to 70%. So this is just the main index. How long will it last? Well, the average bear market since the beginning of since the beginning of 1900s has lasted about 19 months. So if, let's hope this is an average bear market, then we have about 12 months left, about a year left. And the average bear market has a downturn of 38%, so we are around 2023. So it's not that bad yet. It will get worse, most likely. But again, if you're young and you're putting money into the market, then it's just great. So how would I trade it if I were you? Then I would first determine this. You have to determine yourself that I believe this is an average bear market, i.e. 12 months. So you divide what you want to buy into 12 parts, and then you invest one part each month for 12 months. That's a very easy strategy. That means that you probably won't miss out on the turn, but then again, okay, you won't hit the bottom, but no one really hits the bottom. But if you think like, no, this is like much worse, this is going to get much worse, then you do this with 24 months or 36 or whatever you decide. But this comes back to don't think like, oh, I'm an expert. He said 12 months, then it must be 12 months. It's because then when it goes to 14 months or 16, then you're going to start to get nervous, and because it wasn't actually your commitment that it was 12 months. But if you remember, like, okay, I said 24 months and it's 16, then you're going to feel comfortable because, yeah, it was me who said 24 months. So I'm cool. I keep investing. So how can you use? Some of you have been on the site, but how can you use this? And I'm trying to, again, teach you now how to fish so you can make money long term. I think, like I said, the main value add and the thing that we spend the most time on is the estimates. Estimates is the core of fundamental research. And we do estimates on 30 Baltic companies. So you don't have to do that. So what we have one section on the website called tables. And here you can do ranking lists. You can rank, for example, which company in the Baltics has the highest dividend yield. And you can rank which is the lowest on PE and so on and so on. So I think this is an initial screening that you should do if you're thinking to invest. So this is the dividend yield ranking list and the top 10 companies. And you can see that the top 10 companies average dividend yield is 6.1%, while if you take all the 30 companies, it's only 2.9%. So it really makes a difference doing this screening. You should have a higher probability to hit the higher return on your portfolio. I will go through those names later, but you will see that some names keeps popping up on these lists. The next one is the lowest PE ranking. And there you have some other names, but again, you see the difference between the top 10 and the Baltic 30 average. So it's almost half if you pick a top 10 company compared to the Baltic 30 average. And there are companies not on the top 10 that usually are a lot more popular and a lot more talked about. But then this is a good reality check. Is it really cheap? Another common multiple that you should look at is price to book value. And you see it's below 1 right now. Market has come down a bit, so it's below 1 for the top 10 companies, while it's 1.6 for the others. But it doesn't mean, don't say like, okay, Tallink is 0.6, then I buy Tallink. It's not that easy, because every company has its individual challenges, so there could be reasons why Tallink is trading at 0.6. Right now, it's the fuel price, of course, which is burdening Tallink, and also Tallinna Sadam, which is on the list. That you have the Ukraine-Russia war, which there might come like a trade embargo on Russian goods. So it's not that easy just to look at this list, but this list will at least hopefully eliminate the worst choices. sales growth. Growth is not so popular anymore, but still it's interesting to see that there is really strong growth for some companies still. If we look at earnings per share growth, there's also some really strong growth companies. But then again, if you look at EPS, the first column, 2001, you see that the top 2 companies had really bad EPS growth, earnings per share growth in 2001 last year. So obviously, if they come back a bit this year, it's going to be really high. But still, it's interesting to see. So once you have done this, and this you can do, again, on the website yourself, there are predetermined lists. So once you have done this, what you want to do is just to see which companies appear in the most categories. So this is the list that we just looked at. And you can see that Lithuanian Ignitis Group, they were in the top 10 list in all those categories. So we looked at 5 categories, so they get 5 points. Linas Agro, they were in 4 out of the 5 categories. So now we're starting to get kind of like summarize and put it together. And so when you have this list, the next step is to look at, okay, now I have to look at the individual companies. And if we then look at those who scored really high, and where I think that there are no reasons why they or excuses why they shouldn't be good, then this Ignitis Group is one of them, which scored the highest, of course. Everyone in Estonia knows Enefit Green, which is not a bad company. It's a great company, and most people made money on it in Estonia. But you know what has happened in the market is usually not what happens in the future in the market, and what's in focus is usually not what's in focus in the future. So Ignitis Group has had complete opposite to Enefit Green. Their IPO price was I think 23, 24, higher, and it started to fall right away. It was kind of a let's not call it failure, but it wasn't a great success. So there's a bad will in that stock. People have not made money, which is great because they're yielding then 5.8% this year, versus then Enefit Green 4.1%, which is not bad. I'm not saying that you should sell Enefit Green, but you should consider buying some Ignitis. The next one, which most Estonians don't look at, is Linas Agro, which is valued, if you take EV/EBITDA, which is a common valuation multiple. Basically, it's a discount of like 50% to the peers in that group, and they are in the food sector and agri sector, which is right now, given what's happening, it's quite good. Let's say good conditions for food and agricultural companies. So, with a P of 5.6, we think this is a company you should look at as well. Probably not the company that most people talk about, but that's a positive thing. Another company which Estonians probably haven't looked at is Šiaulių Bankas, which we think is just too cheap if you compare to LHV and Coop, especially Coop then, because if you look at return on equity, which is the usual measurement of banks' profitability, then it's about the same for Coop and Šiaulių Bankas, 13%. But if you look at how much is each euro of equity book value priced, then Šiaulių is actually below 1 at 0.8, while you have Coop at 2.2. So there's like if you're a fundamentalist, you will see this and you will try and find this kind of differences, and you will see that okay, this stock everyone talks about and it's highly valued, and then you will see this stock no one talks about, it's lowly valued. So what do? You probably buy the one no one talks about. While I mean you in here, but most people buy the one that everyone talks about. Express Group, not my only, but finally Estonian stock that I still think is attractive. And here what has happened is that they sold their print operations, which is not very sexy business. It was declining, had declining sales and not very high margins. And what happened then, once they sold it last year, is that all of a sudden the digital sales became from like 48% to now 77%, which meant that the growth, the margins just expanded and the sales growth just exploded. So last year with print, in 2020 with print, they had negative sales growth. The whole group had negative sales growth of 6%, even though the digital subscribers was growing by 50-60%. In 2021, without print, they had double-digit sales growth, and they continued to grow subscribers by double digits. So all of a sudden, you see the print is not destroying the numbers anymore, and you can see also the share price that in 21 when they divested print, it's gone up, and we are in a bear market. So people are actually, some smart money has invested into this. Next one, also Estonian, which I like, which most people know, is Tallinna Kaubamaja. This company has paid dividends 16 years in a row, even throughout the pandemic. I mean, you had a yield of 6% in the pandemic. That's amazing. I think if you're Estonian, then this should be part of the portfolio. And if you look going forward, it's almost 7% yield. So again, this is not something that will triple or even double, but you get some 7% yield. It's not bad. The last stock, 3 minutes left, that's good, is the IPO, ongoing IPO, which is Indexo, which is actually one of the co-founders, Estonian, Henrik Karmo, which started or founded also Tuleva, I think in Estonia it's called, this pension fund company. And he did exactly the same now in Latvia, and very, very successfully, I should say, he and his co-founders. So they gone from 0 market share in 2017 to 9% of the pension market in Latvia, and also from 0 then in assets under management to almost 500 million euro sized funds, which is not bad. And if you look at, it's kind of like, reminds me of LHV when they were young. If you look at the pension savers in Latvia who are changing pension funds, in Q1, Indexo basically grabbed all of the people who changed pension funds. So that means, since this is monthly pension savings, that they will continue to take market share. And I think they also, this is the banking market share in Latvia, because it's different from Estonia. They don't have an LHV in Latvia. So 85% of the market is controlled by the big 4 banks. And I think Henrik and his co-founders saw this as well, that, we've done it now with funds. Let's disrupt the banking market. Let's do an LHV, but in Latvia. And so that's why they're doing the IPO. They will start a bank in Latvia. And this one, I think this picture shows how underbanked Latvia is. This is the cost of a housing loan in Latvia. So it's the second highest cost in Europe to lend money for a house. Only Greece is worse. And that's obviously because there's no competition, and let's say mainly the Swedish banks, they have no incentive to compete on risk or on price. But if you look at Estonia here, where you have both LHV and Coop, it's at the European average. So you're actually borrowing for your house at the European average, which is not bad. So what we believe valuation-wise is that only the funds alone, given the momentum they have in the growth of new savers, is worth the IPO price of 14 euro. And then we discount it quite heavily because it's kind of a startup, the bank, but that could be worth something like 5 euro. Something important to say is that if they don't get the banking license, they are planning to get it in Q1 next year. if they don't get this within 2 years, they will buy back the shares at the IPO price. So basically, because the main worry might be that what if they don't get the bank license and I give money or invest and then it doesn't happen. So then they buy it back at the IPO price. Okay, now it's 0. So that's the summary. These are the stocks we just went through. But again, just don't go out and buy it. Feel yourself if this fits to you, and then start investing, because this is a perfect. I mean, you don't want to invest in a bull market at the end of a bull market. Now you are so lucky because we are in the middle of a bear market. So start to get active. That's it.
Thank you very much, Mattias. And now we have some time for questions. I see a hand back there.
So can we get a mic? Mm-hmm.
Hello, thank you. I have a question about mass consciousness. Do you take it into account somehow? Like, for example, when people see some bad news, they intend to sell it, like when the war came and people are still selling. Of course, some people didn't sell, but now they're thinking like, okay, maybe I should start selling because the price is only dropping. Do you take it into account somehow or not?
Actually, no. Fundamental research shouldn't take the kind of psychology into the picture. It should be all about the estimates and the conditions that the underlying condition that decide the estimates. So no, but yeah, I mean, everybody, all the analysts, I always say, I've seen it, that now target prices for all analysts are like way higher than the share prices, because obviously the market has come down 20%. So that's why you can't take these target prices too seriously, because it depends on the market. So you will see now analysts lagging, taking down their target prices, but still being positive to the share, which is common in a bear market. So then if you took it seriously and you thought like, oh, target 10, and then the analyst says, no, now it's target 6, which is a lot lower, but it's still a buy because it's at 3. So it's all like relative. But the answer is that no, we don't really think about the mass psychology. That you have to. That's kind of on your part, I guess. Do I want to run along with this or not? I think I should say that during the Corona bear market, retail investors, I think especially in Estonia, they did really good. I mean, they bought at the bottom, and many funds had to sell. So I was really impressed by how the retail investors traded the Corona market. I think this bear market we're in right now, it's going to be tougher because it's going to probably last longer, and things are going to blow up here and there. We've seen some crypto blow-ups, and it will get a bit more ugly than the Corona, even though Corona obviously was tough. But this will be more challenges, I think.
I actually have one question in between. I'm just afraid that nobody asks. Yeah. So it was. I was impressed by the generosity that you publish everything on your website. What is your interest or business model? Yeah. How do you earn, like having 3 analysts working the whole day?
That's a good question. I forgot to talk about that. Nothing is for free in life. I'm not that nice guy. The companies pay me to do the research, which is usually you investors pay banks to do the research. But I flipped the model so that the companies I write about, they pay me to write about them. And then you might say, yeah, but then you will be overly positive and so on. And that is a risk. But then you will, at the end of the day, say, this guy is like too overly positive because he gets paid by the company, so I'm not going to read it. So I have to keep it honest, so to speak. And so far, given the number of downloads, I think we succeeded. And also in my contract with the companies, it clearly states that they cannot decide what I write. So I have like freedom to say what I want. But obviously, I'm not going to be super mean to a company and then expect to get paid from them. So that's good to know. There is a positive bias, but then if you look at traditional banks, have you ever seen a IPO with a negative IPO research? Probably not, because everyone is biased. This is just biased in a different way.
Thank you.
So we have time for one more question from the pub. That's very active. Yeah. Maybe get a mic from there.
Thank you. Can you share the worst experience you had with stocks in your own portfolio, and how did you overcome it?
I think there are two examples. One was an internet stock in '99, where it went up, I think, 20 times, which back then was a lot. Now with cryptos, that's like nothing, but then it was amazing. And then it went down 99%. And this company built websites. It's actually true. The hyped companies back then in the 90s, they actually built HTML websites, and that was the future. And you know how it is today. It's not really that amazing. But then only like 20% of the companies had a website, or even less. So there, basically, I lost. I got wiped out. But then again, I was like your age, so it didn't matter. You can always move in with parents and do whatever. It's not. It's not the end of the world. That's why I'm saying that you guys are so lucky now. If this is my probably not the last, but the second to last bear market, then I really have to gain from this one. And the other trade was actually not a loss, but a missed profit or a too small profit was Apple. When I actually owned it or bought it when Steve Jobs came back, I think I made 50% profit, and I sold, and I was like the king. But I made like $20,000 or something. I can't even remember. It was so less. But if I would have just kept it, it would have been $3-4 million today. So then I learned the lesson that if you find a winner, then just stay with it. Especially if you're young, just stay with it.
So this is a very good point to finish the presentation. Thank you very much, Mattias.
Thank you.